Welcome back. Well, markets still reeling around that 5340 mark. We'll come back to it in a bit. Let's plod through one more earnings. Pidilite Industries announced its numbers, and the fourth quarter, again a very good run rate of 30% growth produced, and profits, of course, were the place where the pain was. Let's check with the management about the company itself. Sandeep Batra, the CFO of Pidilite, joins us on the phone line. Mr. Batra, if you can take us through the reasons for the profit being lower. Is it largely the reduction in the value of the subsidiary?
Good afternoon. Let me first, give you some headlines on the consolidated performance, because that truly reflects the performance of the corporation. Net sales grew by 22.8%.
You're giving us the full year numbers?
This is for the quarter, for the fourth quarter. Net sales grew by 22.8% over the same quarter last year, and earnings before interest and tax and before foreign exchange difference grew by 23.8%. And profit before tax grew by 32.8%. So the profit growth was certainly stronger than the top line growth. However, as far as the performance of the parent company on a standalone basis is concerned, top line grew by 24%, but during the quarter, profit before tax and before exceptional items grew at 29%, again faster than the top line. However, during the quarter, the company decided to, as a matter of prudence, make a provision of rupees 25 crores towards the diminution in value of its subsidiary, Pidilite Middle East Limited. This subsidiary is the principal shareholder of a construction chemical business in Dubai called Jupiter Chemicals. And that company has been underperforming over the last 4 to 5 years and incurring cash losses. So therefore, the investment company in Dubai impaired its holding in Jupiter, which required us to also make a provision on a prudent basis. But if you exclude that, and this provision, mind you, has no impact on the consolidated results.
So in any case, there has been a EBITDA margin erosion. I assume would have been raw material costs. So what are you observing on the pricing side? Will you be able to pass on more of your costs? And the second, your ads to the percentage of sales has been higher this time. Was it a one-off, or you expect to continue maintaining this ad as a percentage of sales at current levels?
Generally, our EBITDA in the fourth quarter, which is January-March, is lower than the full year EBITDA, and that is because for us the fourth quarter in terms of sales is also the smallest quarter, and that volume impact certainly has some impact on the EBITDA. But if you were to look at same period last year, our EBITDA is more or less similar in the fourth quarter as compared to what it was last year. Yes, we are seeing headline inflation on input costs. There has been significant increases in some commodities which have impacted our margins, but we would have announced and taken corresponding price increases in the current quarter.
All right. Well, very quickly, Mr. Batra, any guidance you can give us to your FY12 performance, top line, bottom line, margins?
As a company, we don't give any guidance, but certainly, if the economic situation remains similar to what it was last year, we certainly see a performance of last year getting repeated.
All right. Thanks a lot for joining us. Even as we were speaking to Pidilite, there is that positive news flashing on your screen. 13 German banks passing their stress test in the preliminary round. Will this be at least some kind of a temporary consolidation phase for European stocks and therefore for all asset markets? We will have to wait for that. There has been a slight improvement, definitely, because European indices were down close to 0.5%. They're still down, but that's more like 0.25% at this point in time. We will have to see what it will mean by way of impact on our markets, which also have an F&O segment to negotiate. The last one now will be crucial. Stay with us. NSE closing bell coming up for you after this break.